Welcome back. You're joining State of Business. On midweek discussion tonight, we have with us Senior Lecturer of the Department of Economics, University of Colombo, Mr. Indrajith Aponso joining us. He's also a member of the Econsult think tank. Let's talk to him a little about the current growth strategy in the country and the way forward for 2015. A warm welcome to you to our studios.
My pleasure to be here.
Well, let's talk a little about the election. I think Sri Lanka is planning to head into another election. How important do you think this is for the country economically and politically, right after a presidential election 4 months ago?
General elections are not very favorable for economics. In any election year, this economics performance tend to lag behind because the priorities change. It's not so much the economics that matter, it's more about the politics that matter. So which makes it harder for investors to make any decisions. So they postpone decisions if there are elections around.
Right. If we move to talk a little about a recent ADB report in March actually. Now ADB predicted a slowdown in the economic growth to 7% this year, but they still say that favorable economic conditions remain in the country. What is your view in terms of the economic conditions and the growth story of the country's economy?
When you say economic growth, there is something called economic growth potential and the realized economic growth.
Right.
What the ADB, in my opinion, says is it is the economic growth potential which is very much intact. What is not happening is it probably will not be delivered in the
When you talk about the potential and what could be realized, what is the difference here for Sri Lanka?
The potential for Sri Lanka is, Sri Lanka has been growing around 7.5% for the last 2-3 years, which basically places the potential, and also the fact that there are so many other bits and pieces, infrastructure are in place.
Right.
But the outcome for this particular year is that you had one election in Jan, going to have another election, and in between there is a kind of a period where things are not quite effectively taking place. If you are to expect a large economic growth towards the second half of this year, you should be expecting a fair amount of investments in the first half of the year, so which is not happening. So the likelihood is that there can be a slowdown. There's
also observation that although this period of uncertainty remains, during the second half of the year, Sri Lanka would actually see a better turnaround in policies and of course the situation. What is your observation?
I think it is always good to be optimistic, but what happens is that optimism did not live up to the expectation. If you look at the first half, where certain expectations were there, and when that did not happen, and there is no reason one would think, okay, it's going to happen the second time immediately. So it they may have to sustain this kind of policy direction, and so that that will only make the investors more comfortable, and whoever who is going to make production more comfortable and get on with it.
Right. If we move on to talk a little about the T-bill issue in Parliament just a few days ago, actually last week, the government tried to seek parliamentary approval to obtain 400 billion rupees via T-bill issue. How do you look at this? What is the need for the country now, and what impact does this have?
I think there are two treasury bills and treasury bonds. Well, a bit of a fiasco type thing, One was this treasury bonds, which was 1 billion enhanced to higher number, and then as a result you end up having to incur a sizable increase in the interest rates. That's one, and which things still haven't been resolved. Probably the report is due today or tomorrow. So here then the treasury bills. Now the treasury bill, I'm just trying to figure out why the treasury bills becoming the next focus. Partly maybe because of the treasury bonds issue. Otherwise they would have gone for the treasury bonds issue. Now that has got stuck there. So as a result, you've got to look for the next avenue, that is the treasury bills. The trouble with treasury bills, the treasury bills are typically short term. 1 year is the maximum.
Right.
And we have had a past where a lot of treasury bills have been the main means of deficit financing. What did it do? It kept the interest rates high. For a long period of time, people are paying high interest rates for the short term market, which should not have happened. So, and as a result, what happened was, your entire balances are going to get off balance. Even the deficit interest components on the deficit, and also the low interest rate regime, at least which is prevalent at the moment, may be under pressure had there been treasury bill issues. So which would bring back the scenario that we had several years ago. So I'm not too sure whether the issue of treasury bills is an enlargement of the overall debt financing, or is it a situation of where you are shifting from treasury bonds to treasury bills, which is typically a short term market thing. So in that case, it will, in my opinion, it's not a wise move.
It's not.
It's not a wise move.
What's the impact on interest rates currently and the consumption pattern? What are we to expect?
As I talked to some of the bankers, I think they're expecting interest rates to go up.
Okay.
So there was a time where they were offering more and more lower interest rates, but that situation has changed now. So they are sort of basically looking at interest rate rise, some kind of interest rate rise. Now the issue is, whether it's going to rise few base points or whether it's going to rise a considerable point in the times to come, means bad for economic growth, because it's going to make the cost of finance go up, and it's going to make the profitability go down, and also it shifts the surplus from the production sectors to the banking sectors, which is not a right move for a long-term economic growth.
What do you think needs to be done?
I think they have to stabilize the sentiments. At the moment, the sentiments are not very favorable. So they have to stabilize sentiments and at least give some direction where it is going to be clear-cut from the investor's point of view. And also it should be providing sentiments which will attract investors to come in this country. And it is very, very fundamental. At the moment we are talking about 30% of GDP investment level, which could sustain maximum 7.5% economic growth. But 7.5% economic growth is just good for survival at the moment. If you look at the 50 over games have changed now. It's not a certain number of runs per over, it's much bigger. So same with the economic growth as well. So I would think that they have to, this government had to look at these issues very seriously, and how they should sort them out as quickly as possible is the way forward. But what I'm not too sure is how long it will take, and which direction it will go, and what will be the ultimate reaction from the people who are observing these changes is yet to be seen. And with that, elections coming in can have a further dimension and uncertainty brought into the picture.
So it looks like we'll have to have a wait and see approach yet again.
Well, that's the only way we could do. If there's nothing else you could do, you and I can't do anything about it.
Right.
Unless we become the presidents of this country.
So we had with us Indrajith Aponso, Senior Lecturer of the Economics Department of Colombo University. He's also a member of the Econsult think tank, joining us on State of Business. After this break, we'll be back with more.